The National Assembly's debate of the 2025 national budget is still ongoing. Voting is now taking place by voice, with each MP saying in turn what their vote is. At the time of reporting, voting was taking place by alphabetical order according to each party. Members appear to be voting along party positions on the issue, raising questions on the future of the GNU as the DA caucus votes against the budget. The private sector can turbocharge South Africa's special economic zones. That's according to a report by the Centre for Development and Enterprise. The government spent about 25 billion rand on SEZs since their inception in 2014. But according to the think tank, the results have been extremely disappointing, and private sector expertise should be brought in to run them. It's added that just 4 of the 12 designated zones have attracted meaningful commercial activity. Those include Guga, the East London Industrial Development Zone, Dube Trade Port, and Tshwane Automotive SEZ. Accelerate Property Fund is whittling down its portfolio. The Diversified Real Estate Investment Trust is offloading its ownership in the Portside office tower in Cape Town, and that's in a deal worth 580 million rand. Accelerate says the transaction forms part of an ongoing strategic repositioning and restructuring program, and that it will use the proceeds to reduce debt. Absa has increased its minimum monthly pay. Employees at the lower end of the scale will now receive at least 20,833 rand. For the year, that amounts to 250,000 rand. In its 2024 annual report, the lender said it continues to focus on ensuring that minimum remuneration levels in all of its markets are appropriate. The Road Accident Fund says it cannot pay claimants and suppliers. That's because SARS withdrew 2 billion rand from its funds to pay Eskom for diesel refunds. Last week, Pretoria's High Court issued an interdict stopping SARS from withdrawing over 5 billion rand from the RAF coffers. And while Judge Ronald Tolme in her judgment gave SARS and the RAF 45 days to sort out the dispute, that court intervention has been rejected because SARS is appealing the court order. In international news, U.S. buyers snapped up more pickup trucks and sport utility vehicles in the first quarter from a year earlier in the run-up to President Donald Trump's tariffs on auto imports, which could raise prices by thousands of dollars. Let's take a look for more detail.
U.S. auto sales jumped during the first quarter as the prospect of big import tariffs loomed over the market. Figures out show General Motors was the biggest winner, with a 17% surge in sales. It saw strong demand for affordable crossovers like its Chevrolet Trax SUV, which is made in South Korea. There were gains too for big Asian names, including Hyundai, Mazda and Honda. Hyundai Motor North America boss Randy Parker said the past weekend was the best he'd known for a very long time. He credited shoppers rushing to beat the tariffs. Now Donald Trump's new 25% levy on imported cars will kick in from April 3rd.
And this is very modest. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff.
Analysts say that looks certain to drive a big spike in prices and a drop in sales as a result. The effect could be most pronounced for lower-cost vehicles, where profit margins are tighter. Mercedes had to deny reports by Bloomberg that it would halt all imports of its low-end models. Now the fear is that some Americans will be priced out of the market altogether, with the average selling price of a new car already nearing $50,000. If that drives buyers to look for used vehicles instead, then second-hand prices could also jump. Overall, figures show U.S. new vehicle sales for the quarter hit 3.91 million units, or almost 5% up on this time last year.
And Novo Holdings, the controlling shareholder of obesity drug maker Novo Nordisk, nearly doubled annual income and investment returns to a record of $8 billion in 2024 and generated returns of 18%, up from 9.4% the year before. Here's more detail in this report.
Weight loss drug Wegovy has driven Novo Holdings to fresh highs. The company said Wednesday it nearly doubled annual income and investment returns to a record $8.66 billion last year. Novo Holdings is the controlling shareholder of obesity drug maker Novo Nordisk. Novo Holdings said its portfolio generated returns of 18%, up from 9.4% the year before. The portfolio has investments in life sciences and a broad range of assets. Novo Holdings invested close to $5 billion in life sciences targeting cancer, obesity and neurodegenerative disorders last year. Its biggest acquisition by far was of pharma manufacturing and services company Catalent for $16.5 billion. That was the largest healthcare buyout in 2024. It then sold 3 Catalent manufacturing plants to Novo Nordisk for $11 billion to boost Wegovy production. However, Novo Nordisk's market value has roughly halved since July last year. Some investors are concerned it's lost its first mover advantage to US rival Eli Lilly in the competitive obesity drug market.